Hello everyone, this is Sean Power and this is my week 3 presentation on market recognition for Dr. Noordine's Patterns of Recognition course at Full Sail. Today I'll be going over an analysis that I've performed for the T-Mobile stock, which trades under the symbol TMIS. I'll perform a correlation analysis, go over whale tracks, help look at Bollinger Bands, go over the price per earnings ratio, and lastly give a future outlook on whether or not we should buy, sell, or hold T-Mobile stock. Let's get started first with the correlation I performed. This visual on the left-hand side was done in Power BI. Using a quick measure statistic, you can calculate correlation. You can see a strong correlation here between the average stock price, which was calculated for the years 2016 through 2020 versus the revenue on the x-axis line here, with a trend line, the dotted trend line, showing the positive correlation. It's a strong correlation. There is a jump in revenue in 2020 notated between the purple point and the pink point, and that shows the jump in revenue due to the T-Mobile Sprint merger. On the next slide here, I'll go over this visual I created in Power BI to help analyze the differences in day-to-day volume. This is showing a 2-year span. In light blue, you see the volume changing daily, and in the dark blue line, you see the closing price for the stock changing again daily. I will point out one characteristic here. If you look on the x-axis, during the June-July period in 2020, you see a sharp increase in volume. That was due to T-Mobile splitting their stock in January of 2020. It diverged into 2 different stocks, one used for the public equity offering and the other one referred to as TMIS-R or TMIS rights, and that is referring to the rights offering. So there was a split in the stock, and T-Mobile also announced their intention to sell up to 30 million shares of its common stock around that time. The other thing you're looking for when you see the volume line here getting close to a decrease in price, so you see an increase in volume and a decrease in price, that suggests that there was a large sale. On the other hand, when you see these lines following the same trend, that would suggest that as the volume increases daily, that was due to or where these peaks are in both the volume and the stock price line, that can indicate a potential final rally, so the end of a trend, a high price trend, followed by, again, you can see a decrease in both volume and price coming down this slope here. The next slide is going to go over the Bollinger Bands. The Bollinger Bands here have both an upper band and a lower band. The top graph shows in orange a simple moving average, a 20-day average, which stays in between the upper and lower band. There's also a dotted trend line. On the lower visual here, you can see the orange line is the close of the stock each day. Again, this is for a 2-year period. Whenever you see wider gaps between the light blue line and the dark blue line, you show stock volatility here, meaning that it's going to bounce around a lot more within these lines as investors and traders try to understand fluctuations to the stock, and then as it gets closer to the average line, you can see the stock starts, or the bands become closer, indicating that the trends are understood. Here you can see at the tail end of 2021 the closing prices following this lower trend line. Excuse me, it's following the lower band, and that could indicate that there are not a lot of trades happening during this period. There are either investors holding stock, or there's just a decrease in volume overall. The recent market close following the lower band can also indicate the just an overall decrease in the value of the stock, and we'll go over a couple other different analysis that I've performed to help us understand whether or not we should hold, buy, or sell. So one such calculation is known as the P over E ratio, or the price to earnings ratio. This is calculated by dividing the share price by the earnings per share. And you can see in the table above, I did this for the previous 5 years. In column F, you see the PE ratio. A couple things to notate here. A high P over E ratio means that investors typically would expect higher growth from that company, depending on the average for the telecom industry at any given time. The average for the S&P 500 historically ranges anywhere, that ratio ranges anywhere from 13 to 15. So you can see in the most recent year that this was calculated at 24, would indicate quite a high price to earnings. So compared to the S&P 500 historical value, the T-Mobile stock could be considered to be overvalued, but you would want to look at this ratio for other companies in that same industry, the telecom industry, and those specifically that are focused on 5G technology. The last slide here is the outlook slide, so the final conclusion to this presentation. A couple of different things to point out. An investors.com article recently disclosed that T-Mobile could be potentially targeting a buyback, although there's no timeline for that, which could indicate to investors that there is value in this stock in the near future. It could indicate an appreciation of value in the future, which could explain some of the volatility and why there's so many differences in how the stock is traded quarter to quarter. And although revenue increased in the second quarter in the most recent earnings report by 13%, they still have an accumulation distribution rating of E, which means there's heavy selling happening daily based on volume. The stock price, although right now the stock price is most recently valued at about $128 a share, there is a slow-moving average most recently of $136 a share. So the suggestion right now overall would be to hold this this stock, any shares you have in this stock, and to wait until the company decides whether or not they're going to buy back more shares. And that does it for today's presentation. Here's a list of references, and I hope everyone enjoyed the presentation. Thank you.